If you guys want, are you guys ready?
Yeah.
All right. I'll,
Okay. All right. I'm gonna mute myself then.
all right, I'll give you the 1, 2, 3 count, and then you guys can start.
Okay,
One,
I'll go first.
2, 3, go.
Hello, welcome to NexGen Wealth Talks. My name is Kellie Navarro. I've been working at International Private Wealth Advisors for a little bit over a year, and I graduated last year with my bachelor's focused in finance. I got into finance just because many of you guys was very lost and curious on money and wealth and finances. So I got in it to help other people just like you guys. And Isaac, why don't you
My
introduce
name is
yourself?
Isaac Olivares. I've been a wealth paraplanner at International Private Wealth Advisors for a little bit over a year now. I'm also a student at Cal State University Fullerton. I'm about to graduate for my last year, so most of these concepts are going to apply to me as well, or stuff that I've experienced as well, so I think this will be pretty fun.
So the purpose of today's webinar is to walk through young people, high schoolers, college, early professionals into practical tools that make money management feel accessible, within reach, connect with financial education to feel real and relatable, and foster financial curiosity as well. So here is the agenda that we'll be covering. I will be covering credit, and so Isaac. I will also be doing banking basics and going over some mistakes to avoid. Isaac will cover mental health and money, and then we'll go over Q&A and conclusion. So here are some things we'll cover in today's main topic, which is credit. What is it, credit? Why is it important? How does it work? We'll provide you with some healthy credit habits, go over some myths that you may have heard, and talk about how credit affects purchases. Okay, let's start with credit. This is one of your most important parts of your financial life, and it's also the most misunderstood. When people hear the word credit, they often think about debt or bills, and it carries a negative connotation. But really, it's your financial reputation. It's important because it's a way for banks, landlords, or even employers to see how trustworthy you are with your money. So what exactly is credit? It's basically a record of how you borrow money and pay it back. Every time you take out a loan, use your credit card, make a payment, that information is tracked on a report called your credit report. From that report, you get something called a credit score, a number usually between 300 and 850. Think of it more like your GPA of finances. The higher the score, the better you look to lenders, which down the road could open more opportunities and doors for you. Now, let's talk about the most common tool for building credit, the credit card itself. A credit card lets you borrow money from the bank to buy things now and pay later. But here's the important factor. It's not free money. It's a short-term loan. Here's how the cycle works. You swipe your card. That means you're borrowing money from the card company. Each month you get a statement showing what you owe. You must pay at least the minimum balance on the due date, but it's ideally best to pay the full balance. This is the part that helps you save money. Because if you don't, whatever is left over carries into the next month, and the bar charges interest, which for most young people at your age, it'll be easily 20% or more. That's like paying $120 for something that costs $100 just because you didn't pay it off. So be mindful. If you can't pay in full, don't bother putting it on the card. Credit cards could be powerful, and they build credit history and rewards and protect your purchases, but only if you treat them like a tool, not a wallet extension. So to wrap it up, credit is your financial reputation. It's what lenders and landlords use to see that you're trustworthy. Use it wisely. Make sure you pay off your full balances on time, and your score will go up and help you. And when you build good credit early, it gives you freedom to borrow when you need to, and the peace of mind when you don't.
All right, now that Kelly's covered what credit is and how it works, I'll walk through how to actually build good credit habits. So like Kelly mentioned, your credit score is basically a reflection of your reliability. It shows lenders, landlords, and even employers how responsible you are with money. The two biggest things that matter most are, one, paying your bills on time, every single time. Even one late payment can drop your score fast. Two, keeping your credit use or utilization below 30%. So if you have a $1,000 credit limit, you want to stay under about $300 unless you can pay it off immediately. Think of it, this shows lenders that you're in control, and that word right there, responsible, is what every bank, car dealership, and landlord wants to see. But along the way, I realized there are a ton of myths about credit cards and how they work, and some of them can really hold people back. So let's bust a few. These are 3 of the most common myths I hear when people talk about credit cards. Myth 1, opening up multiple credit cards will ruin your credit. That's actually not entirely true. Opening a card can cause a small, short-term dip, but over time, it can actually help you manage them well. More available credit means a lower utilization rate, and that can actually improve your score. Myth 2, closing an old, unused card will improve your score. Actually, keeping an old card open actually helps because it lengthens your credit history. That's something credit bureaus look at. Just use it once in a while so it doesn't close automatically. Myth number 3, you need to carry a balance to build credit. Nope. You can pay your balance in full every month and still build credit. Carrying a balance just costs you money and interest. So really, the formula for good credit is simple. Use it, pay it off, and repeat. Now let's talk about why this actually matters, how good credit impacts the bigger things in your life that you want as you get older. Good credit isn't just about getting approved for a credit card. It affects some of the biggest financial moves you'll make. If you're buying a car, a good credit score can save you thousands of dollars because it gets you lower interest rates on your loan. A lower score can mean higher monthly payments or even getting denied altogether. If you're trying to rent an apartment, landlords almost always check your credit. Poor credit might mean you need a cosigner or a bigger deposit. Even with things like phone plans or utilities, companies sometimes check your credit before they'll approve a contract. And in certain industries, employers might look at your credit report as a part of the hiring process, especially if you're applying for jobs that involve you handling money. So your credit isn't just a number, it's your financial reputation. It follows you wherever you go, and the habits you build now will make a huge difference later. So the takeaway here is simple. Start small, track your spending, and pay your balance in full. Credit can be a tool that builds your future if you use it wisely.
Thank you, Isaac, for wrapping up credit. Now let's talk about something most people never really talk about, banks. The different accounts, how to use your bank accounts to make the money work for you instead of it just sitting there, choosing the right bank for you, and cover the mistakes. Whether you're just getting started with money or already managing your paycheck, knowing where your money lives and how it grows makes a huge difference. First, let's go over the main types of accounts because not all accounts are created equally. First, your checking account. It's your everyday account. It's where your paycheck lands, your bills get paid, and your debit card connects. It's super convenient, but it's also really easy to overspend. Savings. This is your safety net. You don't want to touch this money every day. They're great for goals, emergencies, but most regular savings accounts pay basically nothing. We're talking about 0.01%. Now another one, my personal favorite, is a high yield savings account. Online banks usually offer these accounts which pay 10 to 20% more or times more than regular savings. Usually you don't get a card, which makes it harder to spend impulsively, and that's a good thing. They're perfect for emergency funds, short-term goals like traveling, moving, or saving for a new car. Another one, CDs, also known as a certificate deposit. A CD is basically a savings account you can't touch. You agree to the bank that you'll leave your money in for a set period of time, like for example, 6 months or a year, and the bank agrees to pay you back what you paid plus interest. But if you do take it out early, you pay a penalty. Therefore, CDs are a great option if you know you won't need the money during the locked window. Now that you know where to keep your money, let's look about how it actually grows. This is where compounding interest comes in. And it's one of the most powerful and best tools when it comes to growing your money. Compounding means your interest is earning interest. Your money makes money and then makes more money on that. The longer it sits and earns, the faster it grows. This creates a snowball effect. Think of saving money like a rolling snowball down the hill. When you start small, it may seem like nothing is happening. It's just a tiny snowball. But as it rolls, it picks up more snow and it gets bigger and bigger. And that's exactly how compounding interest works. So learn from my mistake because I actually didn't start using a high yield savings until much later. And I've now realized I could have saved and earned if I did start earlier. So to review, start saving early. The more money your time has been sitting, the faster it grows. Now that we know how interest can be used to your advantage, let's talk about picking the right bank because not every bank is the same. First, read the fine print. Know the fees, preferably look for ones with no or low fees. Second, avoid monthly maintenance as well. Check if you need to keep a minimum balance. For example, my mom had no idea that her bank required a minimum balance, so she was paying bank fees every month until she personally went into the bank and asked them for the reason for the extra charges. She ended up closing the bank and moving to a different one, but by then she already paid fees she could easily avoid it. And lastly, make sure you understand your overdraft fees. Second, ask questions. Don't be afraid to talk to your bank. They're handling your money, so it's a big deal. Third, look for a great mobile app. You want something with budgeting tools, alerts, and easy transfers. Finally, know the difference between online and traditional banks. Online banks usually offer better rates and fewer fees, while traditional banks make it easier for cash handling and talking to someone in person. Lastly, let's go over some mistakes that can have a big impact and be easily avoided. Number 1, letting your money sit in a low interest account. If your bank pays you almost nothing, consider moving it to a high yield savings account. Number 2, pay unnecessary fees. Avoid overdrafts, out of network ATMs, and that's a big one, and maintenance charges. Check up for alerts or use banks that waive those fees. Number 3, mixing savings and spendings. Keep them separate so you don't accidentally dip into savings. Number 4, not checking your statements. For this one, I actually did not realize I accidentally didn't check my statements and realized that someone else was using my card. So it's important to check constantly. Review them every month for fraud, forgotten subscriptions, or sneaky charges. Lastly, let's go over for example, like I said earlier, I noticed a charge on my credit card that someone bought themselves a $300 vacuum. And they also treated themselves out to eat somewhere nice in New York. I've never even been to New York, so I knew those charges weren't mine. I called my credit card company, disputed the charges easily, explaining my case, and the charges were dismissed. If I hadn't caught that, I would have paid with my own money for those person's charges. 5, ignoring budgeting. You don't need a complicated system. You can try the 50-30-20 rule and adjust to your own needs. That's 50% goes to your needs, 30% goes to your wants, and 20 goes to your savings. Number 6, not having your savings automated. Set it up so money moves to your savings automatically and easily. If you don't see it, you won't spend it. Finally, number 7, the lifestyle creep. As you make more money, don't just spend more to keep up with what you see online. It's okay to treat yourself, just be careful. Social media is not real life.
This next part is about something most people experience but rarely talk about, and that's the connection between money and mental health. Whether you're a student, just starting your career, or figuring things out, money stress is real. It can cause anxiety, guilt, and even effect on your confidence. So in this section, we're gonna go over 4 key areas. Number 1, how money stress affects relationships. Number 2, the danger of comparing your finances to others. And number 3, separating self-worth from net worth. And finally, why talking about it can make all the difference. Let's start with how money can show up emotionally, especially in our relationships. Money stress doesn't just stay in your bank account. It affects your focus, sleep, and communication. When finances feel tight, it can create tension in friendships or relationships. You might start saying no to plans or feel distant because you don't want to talk about what's really going on. Recognizing that anxiety early can prevent burnout or avoidance later. Financial awareness is really emotional awareness. Once you name what's causing the stress, you can manage it instead of letting it control you. Now, another thing that affects a lot of people, especially in our generation, or mine, is comparison. Social media makes it look like everyone's winning financially, but people post purchases, not payments. You see the new cars, trips, apartments, but not the credit card bills or the family in the background that's helping out. Everyone's financial story has unseen context, and constant comparison only leads to anxiety or impulsive spending. The healthiest mindset to focus on is your goals, your timing, and your progress. Because once you stop comparing, you can financially feel proud of where you are and not pressured to catch up. Now, a personal story of mine is I remember scrolling through college on Instagram, and I saw how are people my age affording all this stuff. I'm seeing them go on trips, going on cruises, and it wasn't until later I found out that I had friends putting it on credit cards or getting help from their parents. And for me, that was a big perspective shift because progress isn't a race, it's personal. And that brings us to something just as important. Understanding your self-worth has nothing to do with your net worth. Your income, your savings, or debt do not define who you are. Financial challenges are temporary. Your value is not. Success isn't about how much money you have. It's about discipline, direction, and consistency. What really matters is learning, improving, and staying consistent, not being perfect. I've had times when I looked at my balance and I felt like it said something about me, like I wasn't doing enough, but it doesn't work that way. Your worth isn't measured by your balance, it's measured by your growth. And once you start seeing money that way, not as your identity, but as a tool, the next step is to talk about it. Money is one of the biggest silent stressors, but everyone deals with it. When you talk about money, it removes the shame and replaces it with understanding. Honest conversations with friends, mentors, or family lead to smarter decisions and more support. Financial vulnerability is a form of strength and not weakness. The more we normalize talking about money, the easier it becomes for us to manage. So if there's one thing to take away from this section, it's that financial wellness isn't just about saving or budgeting. It's about protecting your peace, understanding your emotions, and realizing you're not alone in this.
So we've talked a lot about credit, banking, even the emotional side of money. Now we want to hear from you. What questions do you have? It can be anything, something you've experienced, something that confuses you, or even myths that you've heard about money.
Questions?
Any questions?
I think we have someone in the chat, Eddie.
Hi, Isaac and Kelly. Great job today. I learned a lot. And I am not a young person, but I have a question about how to approach these conversations, for example, with my nieces and nephews who are high school and college age, in a way that they'll receive the information and maybe not be defensive, or, how can we present it in a way where people can learn from it versus it sounding preachy and like a disciplining type of thing?
Yeah, I think first get them involved in maybe something that you talk about credit, like your experience with credit. I know for my brother, he didn't start asking until I opened about myself. So I think being relatable to them might be something helpful. You want to be able to share stories or anything like that. Same with my mom. Just hearing her stories got me thinking, okay, how can I improve from those and not make mistakes like hers? And I think that makes it easier to open up to adults when you're a kid. Anything you want to add?
I think, I'm trying to think about it in my shoes. Like, personally, if someone was approaching me, like, I'd like for someone to relate to me, first of all, and then one, maybe show me so I could see, like, okay, am I doing something wrong? What's going wrong? So I could visually see what's going on. And then once I get that awareness of what's going on, then I could be like, what's next? How can I improve from there? So I think, all in all, like, making them more aware without coming off pushy, more like a relation-focused way.
Awesome. One more, Isaac, you had said something about, people, you're seeing purchases and not, anything else when people are posting things on social media. But if you're in the situation where, like, maybe you don't have a lot of money to go out with friends, how do you bring up lower or no cost alternatives to have fun with your friends?
No, for sure. I've definitely been in situations like that where I feel like money's been tight for me and some of my friends are doing stuff, but I think that's when you figure out, like, who your real friends are, because I'd never shut my friend down if they told me, like, oh, I can't go out with you guys. We could always find alternatives that way.
Yeah, I agree with that.
I think Oh, my bad.
Go
Go,
ahead.
no, go for it.
No, yeah, I just be open with your friends. I have friends that tell me I'm tight right now that they lost their job. I totally get it. They're my friends because I enjoy their company truly. So we don't really have to go do fancy stuff, eat a fancy dinner all the time.
That's perfect.
Sure. Thank you, guys. And a couple of questions are coming through on the chat. This latest one, where do I go to find a high yield savings account? Kelly, I know you said some online options were good because they have really high rates. And so let's talk a little bit about that.
Yeah, you can find many of them are online. I know Ali is one of them. They actually also create buckets. So if you have a bucket for you're saving for a car, for example, or a trip, so you can create different little buckets for what you're saving for. You can just easily Google like high yield savings account, and you'll get a huge list of them. But I know Ali is one of the great ones because people do like the bucket technique.
Wonderful. Yeah, NerdWallet also they do comparisons of these types of accounts all the time, so you could find one. I love Ally personally. That's one of my favorite, and I love the buckets. It's like you get to plan for everything with those buckets.
I never really did that. That's pretty
No,
cool.
yeah.
So Lewis asks, should I put my money in my retirement plan at work or pay down my credit card bill?
I personally, well, it depends, but I do think probably paying off your credit card bill is best because the interests are so high. And once you get that down, then you can start contributing to your retirement, or also even creating a budget, seeing, okay, need to cut down a little bit for a couple of months on my spending here. That way you can probably do a little bit in the retirement so you're not missing out.
Wonderful. Okay, great question from Justine. Speaking of retirement, what kind of retirement plan would be a good start for someone young and their job doesn't offer a retirement plan?
This one would be a traditional IRA or a Roth IRA. Either or is perfect. Just know the Roth is with money that has already been taxed, and the traditional would be with money that's going to be hasn't been taxed yet.
Okay, wonderful. Lewis asks, what do I need to focus on when I start my first job? Like, how do you get a leg up right when you start your first job financially?
You want to take this one?
I'm trying to think back to when I started this job. I mean, personally, I think what you need to, I mean, you have to understand the basics first of all. So you have to know all the paperwork you're signing, how much is being withheld. Are you going to withhold from your paychecks? I think that's extremely important, for me at least. Do they offer retirement plans? When can you contribute to them? All those guidelines.
Sure. One thing to add is I think exploring the other benefits you have, like some companies will offer like gym membership reimbursement or reimbursement for like health equipment, things like that. So things that you could, offset your spending, like if you want to buy a treadmill, but your company has a reimbursement for that. Like those are always hidden benefits to kind of explore when especially if you're working for a bigger company, that's a good one to look at. So how have you guys dealt with student loans? What are some of your approaches to that?
I personally was lucky enough to not need a student loan. Have you had any student loans?
I didn't have student loans, but my tuition, well, you went to Cal State Fullerton as well. My tuition wasn't high compared to like USC, UCLA, so I would pay my school off with a credit card to get those points for me, and then from there I would just pay that off. That's how I dealt with it.
But I would go to a counselor at school. They have a lot of information with student loans and guide you the best way possible what would fit for you. So that's what I would do.
For sure. Wonderful. So I'll stop. I was just reading the questions off for you guys in case you didn't see them. I think that was the last one. If there are any other questions, you could dump them in the chat and Isaac and Kelly will get to them. I think I had one more on my list, Kelly, that we had talked about. Let me bring up my list again. Oh yes, this is a good one. Is it a good idea? Like, what are some ways to build credit? Like, relying on your parents, like should you ask, can I be an authorized user on your credit card, or can you co-sign a loan for me? Like, what are some options to build credit with the help of your parents, given that they have good credit and even if they don't?
I would say yes, but be careful because it goes both ways. If your parent puts you authorized, make sure that they're responsible with the tips we did today, stay under 30%, make sure they make their payments on time. Because if they don't, it does affect you, even though you're not the one making the purchases and paying. You still get the responsibility of it. And vice versa, if they co-sign with you, make sure that you're also keeping your part and keeping your word of being responsible, because if it doesn't, it does affect your parents. So if you are doing these things, make sure both ways are responsible, and it will help. Or else I would stay away and build your own credit.
Okay. And I did read somewhere that some lenders don't take into account the history of authorized users. So it's like, it's better to sometimes get your own credit card when you're young, starting out, and like not use it, or use it and pay it off like you guys recommend. But yeah, so that's great advice. So we have another question coming in. How can I select the right investment on my 401k? I have to sign up for my 401k, but I don't know which investment to select.
For that one, I know if you go on their website that you have for your retirement plan, there's something called the targeted fund. You can pick that. It's basically projecting what to put you in by the time you retire. So that's a great default that most people do that I know of.
Wonderful. Okay, one more. How do you feel about picking stocks? Can I be a successful trader?
You can be. Is it possible? Yeah, you can be. You can be a successful
Anything
trader.
is possible.
Anything's possible, but it's not as probable if you were to just stick to a fund or just to whatever the 401ks, the target funds. Because I know a
Yeah.
lot of people who tried picking stocks but haven't been very successful. So
Yeah, there was a good quote last night in our Corazon meeting. You can do anything, but you shouldn't do everything, right? So yeah, you could do it, but should you? That's the question, I think.
Everyone should just focus, I think, long term, depending on
Yes.
their goals.
Wonderful. This is really great information. I hope everybody's taking lots of good notes. I'm just scrolling to see if there are any other questions. I'm not seeing anything else, guys, so I'll stop talking.
All right, then before we wrap up, I just want to leave you guys with a final thought. As you begin your financial journey, remember, building wealth isn't about having it all figured out. It's about taking small, intentional steps that add up over time. Whether it's using credit wisely, understanding the basics of banking, or learning how to handle money stress. Every decision you make today can open up doors for you tomorrow. Stay curious, keep learning, and most importantly, know that you're not alone.
And we know this was a lot of information, but the good thing is you don't have to remember everything at once. Money is something you learn through experience, through questions, and then finding the right resources. So we're here to share a few places where you can keep learning after today. So if you're ready to keep learning, visit courses.luisbarajas.com. It's a great step to stay informed and start building healthy financial habits. Thank you, and here's our contact information. If you had any other questions for us, feel free to send them here.
Questions, topic ideas for the next one.
Exactly.
And we appreciate you guys all joining. Thank you for your time.
Thank you so much.